Hey guys, so let's talk about risk management. This is a long overdue video that I should have uploaded probably in the beginning when I started the YouTube channel or I created this community. But nevertheless, here it is. And I'm going to be dividing this entire video into two parts. The second part will be showing the Risk of Ruins simulator where it randomly generates values based on the values that we feed in there, right? So I'll be uploading that simulator on one of the channels so you guys can play around with it yourself and see what is the strategy that suits you best personally. Okay, so let's talk about the two factors that impact our profitability over time. The first thing is win rate. Of course, the win rate will be, for instance, if you took a total of 10 trades, how many did you win out of those? If you're using risk to reward, which is the bare minimum 1:1 that you should be looking for, nothing less than that is advisable, of course, no matter how good of a technician you are, okay? Or no matter how good your win rate is, always go for minimum 1:1, okay? So let's say if your win rate is above 50% and your risk reward you're going for is 1:1, you should actually be in profits at the end of the month, okay? And for those of you that don't know what risk reward is basically 1:1 would entail basically you're risking $1 to gain $1, right? 3:1 would be you're risking $1 to gain $3 if it goes in your favor, and so on. So a lot of people actually focus on win rate. It becomes an ego thing, I think, for especially the people that start trading in the beginning. They want to be right all the time. They want to brag about it to their friends and you know other fellow traders and whatnot. But you know, bragging about your perfect entries or how good of a win rate you have wouldn't necessarily give you the type of profits that you're looking for at the end of the month, or you know, help you turn this into a career choice. So to reinstate that point further, let me give you an example, okay? So let's take an example of two people that took 10 trades. So this person went for a win rate of 70%, and the risk reward he went for is bare minimum, which is 1:1. Whereas this person has less than 50% win rate, but the risk reward this guy went for is 3:1. So for every dollar he was risking, he was looking to gain $3. So every 1% he was willing to risk to probably get stopped out. You know, he was willing to or he was looking to make 3%. Okay, so when we do the math, we basically see that this person would make 4%, and this person, even though the win rate for this guy is less than 40%, or I mean less than 50%, right? He's making more money than this guy, okay? 2% more. So, you know, this example kind of demonstrates to us that risk reward perhaps is a bit more important than focusing on win rate. So let's talk about the win rate also a little bit further, because a lot of people are obsessed with being right all the time, right? Or not giving up profits, not losing trades, and that doesn't always necessarily have to be a good thing, okay? It's probably if you have very high win rate and you're not making enough money or enough profits at the end of the month, I would highly advise you to assess your trades to see if you are doing one of these four things, okay? The first thing is perhaps you're holding onto your trades for too long. You're going through loss aversion, right? and you're taking big drawdowns on your overall account. The next thing is, if you're holding on to those trades for too long, you're basically wasting your time. And as traders, time is money for us, right? Because within that time period that you're looking to hold on to a trade, I could have taken so many trades, even though my win rate may not be as good as yours, but I could have taken so many other trades, right? Using a very wide stop loss. So if you are either constantly moving your stop loss or putting very wide stop loss, doesn't matter how good your win rate is, just that one or a couple of big hits will really hit your account, where you probably will be negative at the end of the month, or you could eventually blow through your account if you continue that way. Okay, so make sure you definitely assess your trades. A high win rate means nothing if you're not balancing it out properly with risk to reward. Okay, so what is the moral of this entire story? Let's summarize it. So first, as I previously mentioned, make sure that you keep a journal of all of your trades. You assess your strategy, okay? Especially if you're not seeing enough profits. If you're a beginner, intermediate, advanced, whatever level you're at, I highly recommend you keep track of your trades. You could do that manually by putting your trades in Excel, or you could use one of the online journals for trading that are available. Some of you already shared that on the community, so you could probably do that. And the second thing I would highly advise is focus on risk reward and not necessarily the win rate. Win rate, as you guys saw in the example, even if it's less than 50%, in some rare cases, even if it's like 35%, but if you're the higher risk reward you go for, the lower your win rate could be, and you will still be making pretty decent profits. Okay, so devise a strategy where you have a good balance. Okay, and the third thing is pick the greedier levels, right? Be patient on your levels. Let's say if there are two levels, right? And even though people might be looking to take this level, you might want to let that trade go all together and go for the greedier level, which probably means that you may not even get filled, which is fine, because even when we don't take trades, it's basically a positive sign if you don't give your earned profits back to the market. Okay, so let's say if the first level is now going to give you the risk reward that you're looking for, go for this guy, right? Because if the stop loss is like really close by, and even with a small percentage, 1%, or in some cases, I don't know, even like 0.7%, 0.8%, 0.6%. Of course, you would have to deduct the fee and all, and see if that makes sense for you if you're using a big leverage trade, right? But if your position size is high enough and you're not using a really big leverage trade, who knows? Even 0.7 or 0.5% might be a good enough bounce for you. On the other hand, you might be looking to get stopped out, and trying to cut down your losses, and putting stop loss at 0.25 or 0.3%. That's an extreme example I'm giving you, right? The stop loss definitely has to be put at a proper level. It shouldn't just be arbitrarily put 1% below or 0.5% below every single level that you're taking. Some people do that. If it's working out good for you, that's fine, but technically that's not how I have been doing it, and that's not how I advise you to do it. But if your strategy is good enough, it's making money, who am I to question it? And the fourth thing is, of course, give value to your time as much as money, right? Because a lot of people give value to their money, and probably that's why they're holding on to those trades for too long and going for a high win rate, right? Or they will keep DCAing their position until they have a big drawdown on their accounts. And the type of volatility we have on Bitcoin and crypto in general, like, who's to say that that particular level or that particular trade will be back to break even in the next 2 or 3 years, or several months. So you're losing all that time. So value your time as a day trader. Time means money for us, right? And yeah, that's about it. Yeah. So see you guys in the next one.